What's going on, Founder University? We got a new episode for you today, which I'm personally really excited about because it's something that I'm personally interested in, which is real estate. And we have Jesse Abrams on the pod today. He is the co-founder and CEO of a company called Homewise. And in this episode, you'll have a ton of insight into the mortgage industry, real estate. And if you stay to the end, which is my most exciting part that I think you'll love, is I actually pitched Jesse two different business ideas in the real estate industry, and he gives me his honest feedback. Some really small that are easy for anyone to start, and some that are more complex that would be a tough nut to crack. So I hope you enjoy the episode today, and we'll speak soon. Jesse, good to see you again and be reconnected.
Yeah, looking forward to it.
Yeah, we'll jump into things and I'll give some context to your business and what you guys do. But truthfully, I'm selfishly interested to talk to you because from the business side of it, I was always interested in real estate. And that's where I actually started my career in commercial real estate, not residential. But now I own a couple properties, a couple rental units and stuff like that. So on the side, I'm very busy in real estate. And it's an amazing industry to be in. There's a lot of facets to it, and no one knows it better than someone who lives and breathes it all day and every day in your business, which I don't. But hopefully you can give me tips and tricks and sort of insight into the industry and what you're seeing from your side.
Yeah, for sure. The real estate industry is very topical these days. As you know, for being an entrepreneur, we're on this consistent roller coaster of just being a business founder and everything that goes into that. Add into the fact that we have interest rate craziness, we had COVID, we have tariffs. It's been a pretty mad 7 years of real estate in North America. So a lot of exciting things to talk about and craziness along the way.
Yeah, we'll definitely jump into everything. But just to give some context, and I'll sort of speak for you, you can fill in the gaps. You're the co-founder and CEO of Homewise, which is maybe the fastest growing, the largest digital mortgage brokerage in Canada. I don't know where you are in the spectrum, but I'll say one of the fastest growing and largest to give you guys a bump, hopefully, and hopefully it's true. But it looks like over time and tracking what you guys are doing is like online brokerage is where it started. And it seems like it's evolved into different products and stuff like that, where you have like a digital like Redfin type platform where people can search houses and properties, and then you also have a real estate arm of it. So I'm excited to jump into that. But I guess the origin story would be a good place to start. Like, was this a personal vendetta against the mortgage industry that you started out, or how do you know how did Homewise come to be?
As a kid, I used to have a little mortgage stuffed animal. No, it's obviously no one dreams about mortgages from a kid. It literally means death pledge. My background was all customer acquisition. I never thought 15 years ago I'd be working in the mortgage industry, but I was running a data science agency, and one of our biggest clients was a large Canadian bank, specifically on their first-time homebuyer mortgage business. You can imagine working with a bank for a few years, you start to see, okay, they're not doing anything in the digital space, and this is a huge opportunity, and they're so siloed. So I saw that initial zygote in my brain of like, okay, there's something there. Then actually bought my own first home, and my realtor, I asked him if he knew a mortgage broker, and it was almost like that scene from Spaceballs where it's like my friend's cousin's former college roommate. That's who I ended up speaking to. Had an hour and a half phone call with her. Then she sent me a Microsoft Word document to print, fill out, scan, and send back. Then she wanted to meet me at my office. Then I had to go sign the documents with the lender out in Oakville, about 45 minutes from my office. And it was just a classic There's Gotta Be a Better Way moment with companies like Wealthsimple and Sonnet and all these other companies and other financial services. I was like, why is no one doing this in Canada for mortgage? It's such a big opportunity. And that's where the initial idea came for Homewise was, how do we just simplify the mortgage process online, allowing Jane Smith to apply in minutes, and then we match her with her best mortgage options and guide her every step of the way from the process from there. And that was the initial idea of where it all came from.
Yeah, I've been through it a couple of times. It sucks. And it's funny. It's sometimes you sort of just take it for what it is. And it's like, this is the process, is how it's been forever. And you sort of have to follow this because it's a very regulated industry. But I guess the other way to look at it is like, this sucks. Let's see if there's a better way to do it. And I guess, correct me if I'm wrong, but you guys are just in Canada. Like, you guys are registered and focus on Canadian mortgages, right?
Yeah. When we first started the business, there's always the thought process of, do you go to the US? And usually financial services are 10 times bigger in the US than they are Canada. But mortgage is more like only 4 to 4.5 times bigger. And that's because we have these 5-year mortgage terms where every 5 years or less, people are really just renewing or refinancing the mortgage. So big industry here, and there wasn't a lot of competition when we first started. It started to grow over the years, which I think COVID helped bring more people online. But we decided to be purely Canadian and try to really grow in this pretty large market here.
Yeah, it blew my mind. I didn't know that in the States you can sign 30-year mortgages and stuff like that and lock in your rate for decades, which sounds great when the rates were really low. And I'm on 5-year fix, so those sort of timelines always are in the back of my mind of like, when do I have to renew and what are the rates right now? Do you go variable? Do you go fixed and stuff like that? We don't need to get into the nitty gritty, but having the niche of Canada is interesting. I wanted to get your take on it because I think there's tons of business opportunity here, because I'll take this sort of educated guess that the Homewise business model was probably already operable and there was competitors in the States that were doing this already. Was that the situation? And did you sort of run playbooks based off what you saw in the US, or how do you use that to your benefit, or did you?
You know, when we first started, I probably had the largest Google Slides document of everyone in the world who was doing something sort of similar. And then you just reach out to those CEOs on LinkedIn and say, hey, I saw you do this. I'm trying to do this. Would love your advice. And there was a guy named Daniel Haggerty who was running a company called Habito in the UK that I spoke to, a bunch of people in the US, a guy in Australia I spoke to, founder of Morty. She was based in New York. Like, you get all this valuable information from all these other companies out there. And I think that's a really big thing when starting a business. Like, I'm very lucky that I have friends who have started startups, some very successful ones, some less successful ones, and you learn a ton from both. So that was a lot of how we built our base, was just learning and stealing what made a lot of sense for us to do it. And I'd say our goal of what our business was from day one to where we are now, it's not a total difference, but it's evolved quite a lot since then. And you're consistently trying to learn what could work and what could work differently for you than the other companies in the space as well.
Yeah. And how do you, because that's the reason of this podcast, is like learning from other founders and taking those ideas. And you said the real word, which is stealing. A lot of people say borrowing or inspired, but it's part of it. Businesses, you can steal ideas and you can leverage ideas and use it in your own way and put a spin on it, which is completely normal and good practice, I would say. But in terms of reaching out, I think a lot of people that I speak to, at least, are like scared to cold DM CEOs, or like think that they're going to see you as competition or whatever it may be. Like, what was your strategy to do that research? Was it just as blind as like, hey, and naive as like, hey, I'm Jesse, like I want to launch your business in Canada. Can you give me some pointers? Or how did you, like, what were the actual tactics that you did to do that?
It's funny. I'll have a brief story that has nothing to do with this first, and then I'll explain. As a founder, you don't have no shame, because you're creating a brand for your business and yourself, and it's represented through you. But if it's not going to negatively affect your business and it's only going to do something positive for your business, you got to try. And an example of that is when we first launched Homewise, I sent a message to every single Facebook contact I had, every single LinkedIn contact I had. And I even went all the way back into my old Hotmail account to say, hey, we're launching this business. Here's a $1,500 promo code if you get a mortgage with us in the first year of the business. And I sent a message to every single person I knew. People I probably haven't spoken to in 15 years got that message. So it's one of those situations where, again, it's not a no shame thing, because that's not what it's about. It's that when you're starting a business, you got to do whatever is possible to give yourself the upper hand. And I looked at these situations and I said, I could be afraid to send this person a message, or I could just do it. And worst case scenario is they don't reply. And most people reply. Most people want to help. I'm a big fan of the high tide rises all boats mentality. We need more of that in Canada. We do a really bad job of that in Canada. Everyone tries to hide their ideas. I remember my buddy did Y Combinator about 12, 13 years ago. And I asked him what was the best piece of advice he got. He said, honestly, the best piece of advice that he got was tell everyone your idea. Because if anyone steals your idea, it's a shame on you, but you're going to get so much advice along the way. So I took that to heart and just sent the messages on LinkedIn, or found someone who knew someone and got us connected. And that's really how the initial, it's called feedback, I got in my business started, and ideas. Yeah. And you go from there.
Yeah. It's, do you think that's just your natural instinct, or do you think it was, you're sort of desperate in the early days to sort of get feedback, or what do you think that trigger was? Because my side of it, I'll speak to it personally from my side, is like when I started Talently, or even previous business that I tried to start, I was embarrassed because when you have no revenue and you're sort of trying to figure out what you want to do, is like, you don't want to reach out to your personal network. At least I didn't want to reach out to my personal network and sort of be sloppy and not know where I'm going, or really just like them come back to me and say it's a stupid idea. I felt personally embarrassed. I think that was a barrier for me. And then once I started to get clients, it's like, okay, I can be proud of this and put this out in the world and sort of approach people in my network. But do you think that is just your natural instinct, or do you think it was, or what do you think that trigger was to have the confidence go do that?
I think it was like speaking to friends of mine who have done it before, who said, you do this. It's a really good idea. Like one of my good buddies is Mike Katchen, who's the founder of Wealth Simple.
Yeah.
And he's such an amazing, like humble guy when it comes to advice. Like you're like, I want you to talk like you're like a superhero, because that's what he is to a lot of people's perspective in the Canadian startup world. But he's just such a nice, humble guy. And one of the things he said to me was, honestly, the best advice you're going to get in the early phases of your business is from people you know and from people in your network. And like one piece of advice he gave me is, have you created a complete MVP of your business that you could send out to people? And I said, yeah, we're working on a website. He goes, no, just create a PDF, create all the questions in a PDF and send it to 100 people. And that's how we got our first 3 mortgages and a boatload of advice from people. Because I would say to them, like, what do you not like about this? What do you like about this? What do you think about this? And I think it's just when you hear from people like that who have had the success, and then other people who might not have had that level of success, but are building really interesting things, it sort of gives you that kick in the caboose that don't be afraid to do it. And you sometimes just have to do these things. It might be uncomfortable and it might feel like it sucks at the time, but it's impactful in the long term.
Yeah. It's a very sales approach, right? Like you're not scared to get a no, because you said you went through your Facebook and LinkedIn, whatever, message everyone. Like 99% of those people either didn't answer or said no or whatever it was, but 1% of them or 5% of whatever got back to you and either gave you confidence to continue or gave you business. And my business now, like we have a small percentage of our business is actually through friends. And as long as you're delivering good service and you're taking care of them, then it's no skin off anyone's back. But yeah, it can be scary. I don't know. Everyone has that sort of saying, like you don't mix family or friends with business. But if you really have people's best interest in mind, you're actually helping them, in your case, helping them get a lower mortgage rate or an easier mortgage application or whatever, then it could be beneficial. And yeah, Mike Hatch in Canada is a legend in the startup community. I have not to turn this into a Mike Hatchin conversation, but I have an amazing story about Mike as well, because we don't know each other that well, or historically didn't. Both went to Western, we're in the same frat and stuff like that. And I don't even know if Mike will even remember this, but in the early days, and you probably remember this, so Wealthsimple, I knew about Wealthfront in the States, and Wealthsimple is essentially that in Canada. And early days, what they did for acquisition, which I think was an amazing strategy, it wasn't scalable, but it helped them, is they did these free lunch and learns. I don't know if you remember those.
Oh, I thought that was awesome. They were awesome.
Yeah, and they would go around to everyone's offices, they'd pay for lunch, they would do a quick presentation, and Mike used to do the presentations himself at the beginning, and the deck was amazing. It was really about his story and his background as a kid who was in won an investment competition and stuff like that. And when he came to our office at the time I was working at Top Hat, I thought it was amazing what he's doing. I thought Wealthsimple was super, super cool. And I went up to him after and sort of reintroduced myself. So I love what you guys are doing. We should go for a drink and catch up. And I messaged him after. We ended up going for a drink, and I pitched him on working for Wealthsimple. And at the time I was a salesperson. Wealthsimple doesn't need salespeople early days. Like, it was a financial management platform. And I said, like, I'll moonlight for you. So when I'm done work at Top Hat, I will come to the Wealthsimple office and I'll help you book these lunch and learns and do sales and try to just like increase your pipeline. And I literally did that for a couple of weeks. Like, I would leave Top Hat at 5-6 o'clock. I would go to Wealthsimple's office on Richmond Street when there was like 10-15 employees. And I would sit there late night and just like DM office managers and try to get bookings and stuff like that. It didn't end up working out. It was a little bit of a mess. But to your point before about just like doing it, is I only had the confidence to do that because I had my background in sales. I'm like, what's the worst case scenario? Like, Mike says no. And to this day, Mike, we would message from time to time or see him around, but it's unbelievable from that sort of small 10-person, 15-person company, built it into this behemoth in Canada. But sort of tying in your idea of just doing, I think you got to shoot your shot if you want to give yourself a chance, or you're sort of going to be stuck in the situation you are now without doing.
Totally. And I think you bring up an interesting point about those lunch and learns. Is that looks like you hear lunch and learn for such a big company here, you're like, that's crazy. But there's humble beginnings to every business. And there's also like getting those first deals are so important because you learn so much over that time. And a lot of your product is your reputation along the way. Yeah. So he's building the reputation. Wealthsimple's building the reputation by going into the room, presenting themselves and getting those first people that use the product. And everyone has their own way of doing things, but you could learn so much from the others who've done it before you.
Yeah. Do you have any non-scalable sort of growth hacks that you guys used at Homewise, or anything you can think early days to get those first clients? I know Rolodex, Facebook side obviously was one of them, but anything else you guys used to grow early on?
There's so many things we tried to do in the early phases of business just to get people through the door. Honestly, we threw so much against the wall in our first few years. We started off B2C. So Facebook, Instagram, Google, that's how we acquired people. And we had the hypothesis, though, that we're going to work with realtors, and realtors are going to send us deals. And that's going to be the way we grow our business more organically. And for 2 years, we tried that. We tried with realtors. We hired and fired 2 heads of partnerships. My background is not sales. I'm not a sales guy. I am a reluctant salesperson, but now I'm our head of partnerships as the CEO, because that's sort of what you have to do in a business. It's founder-led sales, especially early phase, is so important. And we tried really hard with realtors, but then we realized they like to drive expensive cars, and when the deal's done, wipe their hands clean and move on to the golf course or their next deal from there. And it just wasn't easy for us. And I think that was early phase. Something really key for us to learn is, who are our partners going to be? Since that point, we've actually fully shifted to a B2B2C business. Our paid media budget is down 95% from 3 years ago. We basically spend nothing on paid media anymore compared to what we did at the height of our business from a B2C perspective. And we've built this embedded finance model where we work with all different types of partners, but they're more scalable partners that make sense for a business like us, like tech companies like Borrowell or Credit Karma or NerdWallet, big home builders like Brookfield Residential and Fieldgate. Those are some of the things that we had to learn early phase in our businesses. We thought we had this growth hack with realtors, and it just makes sense, right? There's 50,000 realtors in Ontario. You can get 1,000 of them sending you 1 deal per year. That's 1,000 deals. Yeah, we did it. But sometimes you learn along the way that something that seems very obvious and a very obvious acquisition strategy just might not make sense for your business.
Yeah, that's interesting. I want to unpack a few of the things there, because I think it's super interesting, because you spoke about 3 different phases of acquisition. It was like 1, paid ads, which we can get into. 2 is like partnerships through individuals, let's call them, and real estate agents. And then the last one is through businesses. Personally, I'm investing in paid ads this year. For like first year of business was mostly organic and through brute force. And my background is sales. So that's what I sort of focused on and found success in it. It worked really well. But now it's like, where do you go next? How do you double, triple, whatever it may be? And one of the channels we're going through is paid ads. Can you walk me through your paid ad strategy and what worked, what didn't work? Like, what were your big learnings? Because I'd rather learn about your failures and where you lost money than do it myself.
I'd say the biggest learning I had from paid media is, don't spend too much on paid media unless you think that's the future of your business and your CAC to LTV ratio makes sense from it.
Yeah.
I think we came to market at an interesting time. So we launched in 2019. 2019 was our first year really in business. So like, you're not so worried about the bottom line as you are about just growth and getting revenue through the door. And we weren't also spending that much money on paid media at that time because we'd only raised a small round of financing. But then fast forward to 2020, COVID happens. We're 3 days from the anniversary of that March 10th craziness. And the market shut down for like 3 months. And we had just started to raise our seed round. And we were pretty nervous. We started to spend more money on paid media to try to like make up ground in these situations. And for us as a business that leverages a lot of data in our process, we needed to do mortgages to learn and to build and to do all these things we want to do to build a tech business. That was kind of scary for us to say, okay, well, we need to acquire people. There's no one buying homes for this 3-4 month span. How are we going to do this? So the end of 2020 started to really grow. And then 2021 was a massive year for us. But we also probably spent too much money on paid media because we thought we had to. And we probably got the wrong advice as well. My background being customer acquisition, honestly, we should have just relied internally, but we love working with the Google reps who try to upsell you on stuff. And listen, Google is great in the process, but their goal is to sell you to spend more money. And on Facebook, the same thing. We were sort of caught in the competitive mindset that there's so many other companies now spending more money online, so we have to do that. So my advice to any company that are spending money on paid media is be so diligent on tracking your numbers, your CAC to LTV ratios, what's driving acquisition between the channels. Track what's happening on Facebook and on Google. Hindsight's 2020. I would have loved to cut my paid media budget by half back in 2021 and 2022, but that is what it is. We wouldn't be where we are today if we didn't do those things and drive those opportunities. So I think
was it a positive endeavor for you? Did you come out? I guess the first question should be, did you try to grow it profitably, or was it just grow at all costs and you were willing to grow at a negative? Or how did you guys think about that? Because obviously that's changed as well. Like back in the day, 5 years, 10 years, it sounds not that long ago, but it was all about top line and no one really cared about the bottom line or didn't care about your free cash flow. But now it's profitability is a lot cooler than it used to be. So I guess at the time, was it grow at all costs and you guys were growing at a negative, or were you growing at a positive?
We were growing at a negative, but we never grew as a venture mindset of like, we're going to burn $3 million this year to make $1 million. That was never our mindset there. We always tried to be a lot more efficient than what we saw from other companies in the space. But there's a company like Nesto in our space that in 2021, they're advertising during Leaf games. They're advertising during a hockey game. And I'm excited that I'm advertising on an Instagram ad in Sudbury. Yeah. Right. So you try not to get too externally influenced. So we luckily we're always sort of had more of that try to be more profitable mindset. We've had profitable months. We've gotten closer. We cut our burn by like 70% from 2 years ago to last year, which was great. And that's consistently a focus of ours. But I don't think it was our mentality then because the market was so hot, right? Venture was going crazy. Everyone was investing in businesses. Mortgage was such a hot topic because interest rates were so low. So it just wasn't our mindset. And again, rewinding in time, I would have liked to have been more focused on profitability back then. But when you have investors and you have these external factors, it's hard not to get caught up in that craziness. And that's why we're so lucky we've shifted to this B2B model over the last couple of years, because it's totally changed the trajectory of what the opportunity is for our business, but also not just revenue growth, business growth, but also that profitability side of the business, which I think was a big lesson for us is paid media will grow your revenue, but it's not going to be the way that you're going to be profitable.
Fair enough in that business. And so I guess the takeaway would be know your numbers and track them diligently because it obviously can work. People are spending on these. It doesn't matter if you're an e-commerce or service business or SaaS or whatever. If you track your numbers properly, like you can crack the code. But I think a lot of people think it's the secret sauce that's going to solve everything. And it could just be a black hole where you're dumping money into it.
Totally. Like if you're spending $1,000 to make $1,100, it's not great. Yeah. If you're spending $1,000 to make $2,500, that's great. Did you have a channel that you found that outperform others? Was it the big like Meta, Google, or maybe the niche ones like, I don't know, Pinterest and Reddit and stuff like that, or Twitter or whatever it was? Like what were the best channels for you? On the paid side, it was Google, just because someone's directly searching for that. Yeah. You're not pushing the message. But really it was third parties, like what working through our partners has really been the biggest growth engine for us, and finding like a direct correlation to what you do from a business perspective. I'll give you an example of this. We thought working with realtors, to our point earlier, was going to be a very strong channel because you buy a home, you need a mortgage, right? There's direct correlation there. The reason it didn't work with realtors is just because they're not focused on mortgage. They're so focused on the sales side. So trying to find other adjacent categories that make sense for us is home builders. A lot of our early investors are home builders. And when you go to buy a home from a builder, well, they want to make sure you have a mortgage. So that's a category for us that's been very interesting for us and has been growing quite a lot. So it's finding those sometimes niche categories that you might not be thinking about can drive pretty substantial growth if you focus on them the right way.
Yeah, it makes sense. Right now, I guess that's a good transition as well. So step one was paid ads, helped you guys grow, but not the most efficient. We'll skip over the real estate agents because they're too lazy, jumping around, doing different things. They're hard to get together. It's sort of like you're herding cattle, right? You have to get them on board. You have to keep them engaged. You got to check in with them. And it's not their fault, right? Their core business is getting clients and selling houses. Their core business is not helping them with mortgages. So it makes sense that wasn't top of mind for them. But now you're saying B2B, B2B2C, so business to business to consumer was the sweet spot. How did that go? Did that sort of come naturally, you said, through your investors? Or like, what does that look like today? And I guess, how could other people leverage this concept of B2B2C?
Like pretty early phase in our business. This is when we were 3 guys in the basement of my old house. We saw partnerships as an interesting category just for the idea of like mortgage as a service. It makes sense, right? There's so many adjacent categories, but we didn't focus on it heavily. Our first major partner was Borrowell. It's actually pretty cool. Andrew Graham, who's one of the founders of Borrowell, my friend's brother introduced me to him early on in the business. Classic high tide rises all boats type of guy. He booked a meeting with me the next day to give me advice. I was so excited about this because they just raised a good round of financing. They were growing. I saw them everywhere. And he said, when you launch your business, we'll partner with you. And true to his word, we launched and he partnered with us. And we've been partnered with them for 6 or 7 years already. Well, we haven't been alive for 7 years, but 6 or so years, which is pretty incredible. And we were actually just at their office 2 weeks ago, just doing a fireside chat because it's cool to see that growth. So we started to have those initial partnerships that were bringing us along the way. And then we were part of a pitch to win a fairly large American partnership that was going to be launching in Canada. And we won the partnership. So actually, rewind. Hired and fired 2 heads of partnerships during this time. They both wanted to be realtors. Nothing worked with them. They just couldn't do it. So I took over the partnership role and we started to see some small partners come on. But then there was this big pitch to this US company. And I remember they spoke to us on a Friday before a long weekend, and they said, hey, you know what? This is the final step of the pitch. It was us against two massive companies in comparison to us from the amount. Like one of them had raised $170 million. We at that point had raised 3 and a bit. The other one was a huge corporation. So we're pitching against these two other companies, and they came to us on the Friday and said, we want your pitch by the end of next week. Well, it was a long weekend. So I told my wife, please, we had one kid at that time. I said, please take my daughter to your parents' house as much as possible this weekend. I have this pitch that I want to get to them on Tuesday. Because we could have all these other things. We could have the exact same tech and the exact same offering as someone else. But the one thing that can always differentiate you is the people. People, I think it's consistently when I speak to anyone, people is the most important thing in a business. Who you hire, who you target, who you work with externally, it's the special sauce of any company. So myself and another member of our team, we worked that entire weekend. We got the deck to them on Tuesday. First thing in the morning, they set up a meeting with us Tuesday afternoon. We had a great meeting with them Tuesday afternoon. They said this deck is perfect. It was exactly what we're looking for. Then they wanted to set up another meeting for 2 days later on the Thursday with us to regroup on it. We had a meeting with them on the Thursday, and I said, how is the pitches from the two other companies? And they said, we haven't gotten them yet. We got the business the following Monday. Wow. And that to me was a big shot in the arm, which is like, we're nimble. We could build fast. There was tech that we had not built yet that they wanted in the partnership that I told them would take us 5 weeks. We built it for them in 2.5 weeks, which kudos to Madar, my CTO. Madar and I have worked together for 15 years on and off. He's the best guy in the world. We built them the tech. We were really sure of ourselves. And that was that first major win where I was like, okay, this is a public company in the US. We could do this with public companies in the US. I built one of our contracts on ChatGPT. Like we did a lot of really interesting things along the way. And this is like early phase ChatGPT. And won them as a partner, and then just sort of went to town trying to find similar businesses where it could really work for us, kept on winning these partnerships, and you lose a bunch along the way, right? It's the nature of the beast. But there's our most recent partnership that we signed in November is with a really big company. And the first time I spoke to them was in 2019. We weren't really doing partnerships, but I still pitched the partnership at that point, and it took 5 years to get that partnership. So it's one of those things where we built the tech to make sure we were solving for their problem, which is, I think, the number one thing that we did. Then we provided the solutions in ways that I think were digestible, which is our pitches and the way we talk to them. And the third part was, more than anything, is just don't give up, because you never know when these partnerships are going to happen, and just keep on shooting your shot until you get the no or the maybe or the yes along the way.
Yeah, 100%. And it's also like you can't suffer from imposter syndrome. Like you could have gone to that pitch and be like, oh shit, these guys raised 170 million. They have 500 employees, whatever it may be. Like who are we to even be at this conversation? But you can definitely use that to your benefit. It reminds me, which I think is an interesting take on it, is like sometimes things that seem like a negative, you could just reframe in your mind. Like you're over a smaller company. Okay, that means that we're flexible and we're hungry and we're going to work harder or whatever. And like you can sort of pivot and adjust your proposal however you see fit to use whatever potential negatives as a positive. And I was invited to speak to a class at Rogers, like School of Business at Ryerson or Metropolitan, whatever the university is called now. Yeah. And one of the students asked me, he's like, I'm trying to get a job. I'm in 4th year. Like, I don't have any experience and I feel like I just can't get a job. Like they always ask me for experience. I don't have any experience and I just get shut down for every potential job that I'm applying for. And I said my question back to him was like, how do you feel about that? Do you think it's a positive or a negative? He's like, well, it's obviously a negative. I don't have experience. Everyone else does. Okay. How about this? If you pitch it as like, hey, I'm not an old dog. Like you don't need to teach me new tricks. Like I'm not that. I don't have experience. I'm fresh. You can mold me however I see fit. I'll be hungry and work harder than everyone else because I have to go prove myself. Is that a positive to your potential employer or is that a negative? And he was like, that's an interesting way to think about it, because I always just thought it was negative because that's what the public says. But it's the same thing for you guys. It's like being the smaller company with less capital and less team potentially could be a negative. But if you position it as a positive, then you can create your own sort of dialogue for that client. And obviously it's worked for you guys. And also it sounds like you sort of snowballed it into other partnerships. It's like once you get one big one or small one or whatever, you can leverage it into other partners of the similar industry or similar size or whatever it may be, and sort of go down that path even further.
Yeah, you get the chutzpah, right? You walk into a room when you know you have that big name behind you, and it changes your entire pitch. And not every partnership goes smoothly as well. Partnerships are probably the biggest stress that we've ever had in our business is partnerships, because the market is slow right now, right? Those tariffs, the interest rate craziness, cold weather, it's slow. And when you sign a new partnership in the midst of all that, there are expectations of grandeur and craziness, and we're going to have the biggest mortgage business in the world. It just, you got to have the realities of it, and you have to figure out how to manage those situations. And to your point of being more small and nimble, you get to test things out in those situations with them. You have to move more quickly, but you're also not sending a junior person to manage that partnership like you might have at a big corporation. They're dealing with the A team all the time. They're getting insights from the A team. And I think that's a big point of differentiation as a business that's more nimble, is you're providing the support that they really need along the way.
Yeah, I guess so. And it's interesting, your business, well, compared to mine, is like there's a lot of macro factors and external factors that you can't control, whether it's interest rates or tariffs or whatever it may be. Like, is that something you're constantly thinking about and stressing about, or how do you even deal with that? Because I like to be in control all the time. Like, my business is like, as much effort as I put in is that we could potentially get out. And there's obviously external factors, but very limited external factors. Like, you have, just to list a few in real estate, is like you have interest rates, you have seasonality, you have whatever tariffs and different things like that. Like, is that unemployment rates? Like, those all have factors. Do you pay attention to them, or you don't pay attention to them? What's your strategy?
I have to pay too much attention to them, and it sucks because I was never an economist before I came into the industry, and now I play one on TV. Basically, it's really interesting because you really have to ride a roller coaster. And I mentioned this right at the beginning of our chat. In this world, you got to be on a consistent roller coaster. And my best friend lives across the street from me, and we talk all the time. His business is in the garage door space. And there's some correlation between mortgage and garage door, because people will buy more garage doors when the market's hot, but they'll probably service more when the market's not as hot. And we'll sometimes call each other. We'll be like, "You got a lot of leads today?" No. Okay, thank God, because I got a bad lead day today. So you sort of lean on each other in the darkness, because it does happen, right? There's times when we expect a hot market, but suddenly there's the tariffs that were mentioned, or suddenly there's a crazy snowstorm, or there's COVID, or whatever that might happen. So on our end, we try to always stay on top of macroeconomic trends, bond yields, interest rates. But a lot of times it's just completely out of our power, right? And we have to find ways to grow even in those situations where the market's not hot. Like, as an example, February of this year was the worst month in real estate in the GTA area that there's been in the last 25 years, other than March of 2020 and like September of 2008 when the market crashed. So It's like, that was the worst historical month in the last 25 years out of those two other like horrible months. And we didn't expect that. We thought, Trump's going to win the election in the US and the economy is going to start to pump and people are going to say all these great things, but the exact opposite's happened. So it's one of those things where you got to always be prepared for what's going on, hope for the best, but expect the worst, and plan accordingly and try to find consistent sources of revenue to counteract those negative trends in the market.
Yeah, for sure. And that's what I was going to say to finish it off, is like, you have to sort of insulate yourself and not be completely held on one horse. And going back to the paid ad side, there was a big sort of article about the inefficiency of paid ads in November last year due to the American election, because the Republican and Democratic Party were spending so much money on Meta ads or YouTube ads or whatever it was, that it was creating the cost of ads to go through the roof. Businesses that were still running ads and wanted to be competitive had to double, triple, quadruple their budgets because there was just so much competition. But I guess you have to be aware of those things and plan accordingly. But to your point, you thought Trump would make the economy boom, instead he's making it bust. So you never can plan perfectly, but I guess you have to think about it ahead of time, which is crazy. And I don't envy the fact that you have to run your business based off of these macroeconomic trends, but it's the reality of it. And I guess if you can be honest about it, you can deal with it accordingly.
Totally. And I think one of the things that we know about real estate is anytime it goes down, it comes right back up again. And it's fun. I mean, we look at the economic situation right now in the US. A lot of the talk as to why the economy is being tanked right now is they have to refinance $1 trillion debt in 4 or 5 months. Well, what's the best way to make sure that debt is less expensive? You lower interest rates. So you start to learn in our industry how much of the world is driven by just that magic interest rate, and all these factors sort of combine. We also are in a market right now where there's millions of mortgages up for renewals, starting in basically around the July timeframe through to the end of 2026. And those are based on all the renewals from the 2020 and 2021 boom in the market. So I always like the line, the night is darkest before the dawn. Anytime there's a lull in the market, you got to expect you're going to be riding the wave back upwards after that. So you can't let yourself get too down. You got to realize, sorry for swearing, shit's going to happen, but then great things can happen right around the door. So you always have to be prepared and not let yourself get too down in those situations.
Yeah, I have a 2026 renewal coming up, so we'll see what the rates are at that time, and I'll have to use Homewise to find the best rate. But I guess shifting gears a little bit, because me personally, I always have different business ideas, and I have literally like a Notion folder of 100 different business ideas, and probably a few of them are in the real estate space. You live and breathe this all the time. Real estate has so much money, there's so much opportunity, and it's very old school. Are there any areas or blind spots in the industry? Like if you weren't doing Homewise, you'd be like, holy shit, there's a huge opportunity in real estate to do X, Y, and Z. Like what are some business ideas in real estate you think are just prime for the taking?
It's funny. I remember probably 12, 13 years ago, I was driving with my mom through the neighborhood, and we're talking about how has no one found a way to fully disrupt the real estate world? Like, why are there all these realtors with these expensive homes making so much money? And 13 years later, no one has figured out how to disrupt real estate. It's crazy. Like you have these companies like Open Door that came in like a lion, they sort of backed away. You have Redfin that was just acquired for $1.75 billion by Rocket Group, or whatever the corporate name of Rocket Mortgage is. They never really innovated beyond the mean of we're going to provide leads to realtors. And it's a really interesting one. So when I think about the overall industry, the biggest form of disruption I think there is the lifetime value of someone when it comes to their home ownership experience. And what I mean by that is that first mortgage broker I worked with, the only contact I ever heard from her along the way was she would send me Christmas cards every year. But I celebrate Hanukkah. That's not the best way to connect with me.
You need to know your customer a lot better than that.
Know your customer. You know what? That simple thing was so interesting to me that my mortgage renewal came and gone, and I never heard from her at that point. And at my mortgage renewal, we bought a new house. Why? Because the average first-time home buyer breaks their mortgage before the end of their first 5-year term, because they might buy a new home, they might move, they might refinance, all these different factors. So we're working on this in some ways at Homewise for sure, and this is part of what we want to do. But to me, there's a huge value outside of Homewise to helping someone understand from before they buy through the lifetime of their home ownership journey what their value of their home is, how they can leverage that as a personal living asset, like the value of living in a home, but also a financial asset as well. And I don't believe a house is a financial asset. I'm the first person to say that. Having said that, I could say that a million times, and yet every boomer whose house has gone up 20x over the last 40 years is sitting on their biggest nest egg from a financial perspective, which is their home, not their RRSP. So we are in a situation where I think there's a huge opportunity to help people understand how to leverage their home as an asset, how to build upon that asset, how to own up into their next home, how to potentially refinance their mortgage when you need to do that, and have better financial well-being within their own home. You mentioned real estate investing as well. It's like, how do you help someone leverage that individual asset to do other things that they might want to do in their lives as well? So that's one area that I think is a really big opportunity that we want to tackle here at Homewise. We definitely do. It's a big thing, and it's sort of.
Do you think that is just a service-based business? Like that's just someone having a playbook and executing on it? Do you think it's software enabled? Like how does that actually get done? Because everything you're explaining, it just sounds like they just need a playbook that can just execute and people just do it. But the second you put humans in the mix, they're going to miss shit. They're not going to track it appropriately. They're not going to get it done. So how do you envision it? Is it just training real estate and mortgage brokers to be better, or is it actual like some sort of software development?
I think there's a lot of all different areas that go into it. Like I'll give my personal banking with checking my checking account on CIBC. 20 years ago, you never checked your phone for your banking, right? You go in, you have your little checkbook and you do that. Now it's like crazy to go into a bank. The last time I was in a bank non-business related was when I got married like 7-8 years ago, whenever that was. I don't remember.
That's bad. Tough luck.
Yeah. Sorry, Debbie. But that was the last time I was really in a bank personally. Then you think about investing. I use Wealthsimple for investing. Everything's done from that perspective. You're doing everything from that area. So I think a lot should be done from a tech and digital enablement perspective, but also it's a lot of people get their mortgage and they sort of set it and they forget it. They don't think about it. They don't think about it until 2026 when their renewal is coming up, and it's a scary thing that they have to think about, just the interest rate. They don't think about things like paying down their mortgage more quickly. Like, something I always think about is someone's personal finance or personal financial well-being increases every year in life, generally, from initial job through their entire career. So if you're making $10,000-$20,000 more per year and your mortgage interest rate is 3.5%, it makes a lot of sense to pay down your mortgage more quickly than it does to actually invest that money sometimes, because you're not getting taxed on it and you're getting assured capital when you pay down your mortgage more quickly. So to me, it's having some powerful thing in your pocket that's giving you the advice on how to leverage this financial asset that is the mortgage in your home, that is right there, giving you updates along the way on, like, from an AI perspective, it could be scanning your information, scanning the market, telling you those things. But also, again, myself as a perfect example, when we were going to refinance my mortgage at the end of our 5-year term on our previous home, we had to get a valuation, an appraisal on our home. And I was like, well, home's worth more than I expected it to be at this point. The market's kind of nuts. My old house was kind of weird. There was no backyard. So I looked at there as being sort of a ceiling to this, what the home was going to be worth. Called my realtor. This is before we launched Homewise Real Estate. It was a buddy of mine, Mike. Reached out to him, and I'm the least carpe diem guy on the planet. Like, I do not live in the day. I live 30 years in the future. I am that type of guy. But we bought a house in 3 weeks. It was crazy. So if someone like myself could be persuaded into the financial decision to do that because I had all the information readily available, that to me is powerful. So I think it's a mixture of having the technology handily available, but also I always say technology is not coming to take the jobs of realtors and mortgage agents and financial advisors. Technology powered people are going to come take their job. So being able to have your realtor or your mortgage broker or your financial advisor have this information available to them so they can provide you that advice as well, along with you having it, to me is really powerful. And just giving people insights into things that they didn't know was possible is huge. Like, and no, it's a really quick thing. The amount of my friends who come to us for a mortgage who had no idea they could switch their mortgage at renewal is insane to me. It's crazy. And a large portion of Canadians don't know they could do that. More than half of them just don't want to do it because it's difficult. But you think of like that Geico, 15 minutes could save you 15% or more on your car insurance. Literally spending 1 hour on your mortgage at renewal could save you $4,000, $5,000, $6,000, $7,000. It's the best ROI on your time you could ever do is shopping around your mortgage at renewal. But people are just they don't have the information.
People are lazy or don't know. There's so much information out there, right? Like, you can pay off your mortgage more, you go variable, you go fixed. And I had the same thing when I renewed my mortgage previously. I just went back to my mortgage broker. He sent me the rate. And I actually went, I was playing basketball with a friend of mine, and he works at TD. I told him about whatever the renewal rate. He's like, what rate are you getting? I told him the rate. It was 4.3 or whatever it was. He's like, oh, my guy can beat that for sure at TD. He hooked me up with a guy at TD. He gave me 4.1. Boom, we signed with TD and we moved from Scotia or Equitable to TD or whatever. But I didn't know these things. Like, you just have to go and do it. And there's like rental damming and there's whatever. There's a million different things. And it's really like an education piece. But I think AI now could help with that because it's super personalized, right? Like, your real estate portfolio and structure is way different than mine. So it has to be very unique. So there's tons of ways to go about it. But to your point, there's just so much blind spot in the industry of information and knowing how to leverage it best for your situation.
Totally. And I think that democratization of financial information, it's a rhyme too, is so important, right? Like, I always say that was
a very buzzword statement right there. Democratization of financial information. I like that.
I know.
Don't like that. Get rid of the buzzwords, but I can see it as a headline.
I know. I'm not a buzzword guy. I try not to be, but it's so important to have that. Like, I always say, like, I remember being at university, I was in Finance 101, and that was the only time I'd ever heard the word mortgage in my entire schooling life. I lasted in Finance 101, and then I went into marketing. I was not a finance guy. Funnily enough, now I'm talking about economics. But it's just so not innate to us, and it's such a big decision that we have to make. And I talk about the boomer generation who they bought homes for $250,000, $300,000. Their mortgages were $150K max. Like, that was a big mortgage, but now we're dealing with the average Canadian mortgage is like $600,000, $700,000. And we're talking the GTA or Vancouver or even in Calgary right now, talking $1 million plus mortgages for a lot of people. And if they don't know how to leverage that asset in the right way, they can make big mistakes. Like I remember there was this article a couple of years ago that Jay-Z and Beyonce were taking out a mortgage, and everyone's like, why are they taking out a mortgage? They're so wealthy. That makes no sense. But it was really smart for them to take out a mortgage because the interest rate was low and they could leverage the asset that they have and take out a loan to do these. There's a lot of ways in the US you could buy a property with cash and then remortgage it after. And it's very creative accounting, but you could actually save a lot of money from doing these things. And if you have the right financial people on your side, they're going to help you do that. But just democratization of financial information, just to provide that to someone it's a really important way to help people build more wealth.
100%. And you only learn by doing. Like, I didn't know what the home equity line of credit was, and now HELOC is whatever out there, and you can leverage it or not leverage it, but you don't know until you're in that world. I want to finish with a couple things. So we were talking about business ideas in real estate. I told you about my sort of Notion doc. I want to Shark Tank Dragons End this right now. I want to pitch you 2 potential business ideas in real estate, and you're the guy in real estate, and I would love your general feedback. Not that I'm going to go do these, but just things that I think that should be done. One of them being like a very simple service business that I would love to see like a young person do, because I think there's a huge opportunity there, and it can be a very successful, profitable business, I believe. And the other one is probably a little bit more complex. I don't even know if legally it can be done, but it's a bone that I have to pick, and I'd love to get your take on it. So I'll start with the simple one, and I want you to sort of put your Kevin O'Leary suit on and give me your take on it, the honest feedback if you think there's an opportunity.
Cool. I love this.
So the first one, which is very very service oriented, I think it's prime for like a young person to run with and start their sort of first business, is distribution of information is all through social media right now, specifically short form video. And I don't know if you see this on Reels or Instagram or TikTok. Like, every time you see a real estate video of a showing or someone, they walk up to someone on the street, how much do you pay for rent? And they do a tour. They always have hundreds of thousands of views or whatever it may be. People love seeing each other's homes. I think there's a massive opportunity for a young kid to just go in, book 10 showings every single day, 20 showings every single day, and just pump out real estate content, showing different properties in different areas, unique homes, whatever it may be, and really build like a brand, either locally or in a city or a province or state or whatever it may be, as like the real estate social media content for that market. And I think there's a huge opportunity to build that brand. But on the back end of it, I think there's massive revenue potential through 3 channels. One, obviously AdSense. Like, this is going to get views and people are going to get out there, and you can distribute it across every single social platforms. 2, if you have a brand locally or in an area, real estate agents or brokerages will pay you to highlight their properties. And 3, it could be a huge lead gen format where if people want to buy in that market or whatever it may be, you can put in a type form and say, hey, what's your name? Where are you looking for? What's your budget? I'll connect you with our network of real estate agents. And paying for ads, as you said, is not very scalable and can be very scary. This is free. You don't have to pay for ads. You just put it out there. To your point about democratization, there's democratization of distribution of content right now. And if you put it out there and it's great, you're going to get eyeballs. If you put it out there and it's shit, then you're not going to get any distribution. But for someone who's young and sort of have nothing to lose, you can literally pump out 100 videos a month of this amazing content, put it everywhere. You're going to get millions and millions of eyeballs to generate AdSense, to generate potential sponsored content through real estate agents and brokerages, and potential leads, which I think a lot of people probably don't know this, but like, if you get like a lead and you transfer that to a registered agent, there's ways to do this legally. You can cut pretty big commission checks by literally doing nothing and just being a lead gen for them. So that's my general idea of like being a specific real estate content house and just pumping out real estate content for those 3 sort of revenue channels.
I love that. It's funny. The biggest reason people don't create video content is they say they don't have time, right? And I'm going to bring this back to that student you talked to who said, I don't have experience. I think the biggest mistake a lot of students say when they say they don't have experience is they don't realize just start something small on the side, and it could grow into something big, and it could grow into a job that you might get along the way. This is the perfect example of anyone can do what you're saying. All you need to do is take an iPhone. You could even have a Steadicam. You could buy Steadicams for fairly cheap on AliExpress at this point, or wherever you might buy it. And you could go film all these videos. You could go to these different showings. And yeah, I think it's a nice, simple idea that can be scalable as well, because if you do a good job of it, you might have these realtors be like, why don't I just have this guy do this for me? I don't know about you, but I get these Instagram ads all the time from this one guy who does duct cleaning, he does roofing, he does cleaning of like the dirt with pressure washers. It's the same kid. He's probably 25 to 30 years old, but he just created this smart niche of knowing how to create those videos. And I don't even think he owns the business. I think he just does these videos for these other companies that looks really real. So yeah, it's definitely an interesting idea. A lot of these older realtors too, who've been doing this for a long time, they look at social media as so important, and they talk about social media like crazy, but they don't do it in the way that people consume. And you talk about like, how much do you pay for rent videos? I don't know why I watch them, but I see them and I watch them a lot of the time. I'm like, this is not interesting. I have no interest in this, but something's pulling me into this. Or there's the videos of like, check out this home that we're viewing here and laminate this, whatever that. There's a market for that for sure. So, don't think it's a huge business idea off the start. It's one that could snowball into one where you could create a business with multiple people across the country, province, whatever, doing this on your behalf and doing it for all these other realtors to advertise their products for them.
Yeah, 100%. And I think the one thing you said there is like, you just got to do. And if anyone wants to do this or listen to this, like I'm happy to support and give you advice. But I think to your point about doing it is like, you can literally just pull up Homewise or whatever, find 100 properties, DM every single agent saying, hey, can I produce a free short video for you of your property? It would be very hard to sort of turn that down, and boom, you have 100 pieces of content you can go record and publish and see where it goes from there. And the world will tell you if it's working or not, because you'll see the views and you'll see the exposure, but you have to start somewhere. So for a young person looking to start their own business, make some money, be profitable, give me like a 1 to 10. Where do you rate this as a business idea or an opportunity?
For a young person who like wants to just do something like this, I like it. I give it an 8.1. 8.1.
Oh, I like these professional scores and no even numbers.
No, the Dave Portnoy rating scale, right?
Exactly. Okay, perfect. So that's a simple sort of low bar for someone to start it. And if anyone wants to start this, happy to support and speak to them directly. The other one, and this is sort of the bone to pick. For me in real estate, there seems to be a very obvious mutually beneficial structure that is not in place right now in real estate that should. When you're going to buy a piece of real estate, the buyer wants to get their highest price and the seller wants to know what the price is so they can provide their best offer and hopefully get the best deal or whatever, get the house that they want. It seems like the obvious solution for real estate is to have an open bid. Have a silent auction, get the prices out there. If the house is worth $2 million and the bid's 2.1 and I really want, I'm willing to pay 2.15. This information should be readily available and publicly available to everyone to see, where the seller has visibility into what's going on and how many bids they're getting and what the price point is. And the buyers can see where the price point is so they can adjust their bids appropriately and go to their max budget. Right now, it is a cat and mouse game, which is not beneficial to the buyer or the seller. It's keeping both parties blind and both people insulated. And there might be some legality behind this. But my business idea in this world is to create a silent auctioning platform or opportunity for sellers and buyers and real estate agents to leverage to ensure that everybody gets the best outcome from selling and buying a property.
So, in theory, love the idea. I'm going to tell you the problem. It's been done and people have tried it. And there was a company that raised $30 million 5 years ago to try this in Canada. And suddenly they were gone. Suddenly they didn't exist. The Canadian real estate associations are very powerful and they're a very powerful lobby. and they don't love stuff being readily available because that's the way the system has worked for years. You should see what the bid is. There should be transparency in the process. I think it's crazy that there's not. I also think it's crazy that realtors make the same amount no matter what the home sells for. I think realtors should be awarded for guessing the price of the home that it sells for, and they should make less if the home sells underneath their original listing price, and they can be bonus if the home goes way above their listing price, if it makes sense. I think I agree with you. The lack of transparency in the full real estate transaction to me is a problem, but there's companies that have been trying this. And
in Canada specifically, or like across the world?
No, in Canada specifically. I think in Australia they do this. But they've tried this in Canada because it's a good idea and because it makes complete sense. I'm forgetting the name of the company. They literally raised $33 million, and they were all on the scene, and then suddenly they went away.
Disappeared, or ate them up, or something like that.
Something happened. Either they weren't allowed to do what they want to do, or there were regulations. But it's such a highly regulated industry in certain ways that if it's not allowed, it's not allowed. Having said that, Oria, I think, did allow this, or Korea, or someone bidding within the realtor.ca website. I think it was a thing that they launched. It's just, the problem is realtors are so disincentivized to do that because they want to make the most from the shroud of confusion in the process, and you don't have any real information. Like it's crazy that people will go bid on an $800,000 house that's worth $1.1 million. We've seen the Bathurst and St. Clair homes that are priced 30% lower than the expected price.
Yeah.
It's a problem with the market. And I think the lack of transparency in the real estate market is a real issue. Like we own a real estate brokerage, Homewise Real Estate. I love our realtors. We have a great team, but they'd be the first to say as well that there's a lack of transparency when someone could double end a deal as well, where you could be the seller of the home and bring in the buyer of the home and get 5%. Like, what's the incentive there from a market perspective? So long story short, I like the idea. I wish it was possible.
Yeah.
I just don't know if the industry.
Yeah, and maybe it is. And for me, I like logic, and it seems like a very logical solution where it helps everybody. Because to your point right now, it is not a very transparent process. It's very everyone keeps their cards close to their chest, but that doesn't benefit anyone. It actually hurts everybody involved. So maybe to your point, it may be regulated so heavily in Ontario. Maybe it's better in New York or New Jersey or whatever. Manitoba, like there maybe there's regulations that differ that make this possible, and to your point, Australia is the prime market for it. But that was another side of it, and I don't think someone straight out of school should start this because there's a lot of legal issues that could come with it. It's probably capital you have to raise, you have to deal with groups and stuff like that, so it's not as turnkey. Where the first idea is like you can literally start it from your computer or your phone in an hour. This one is you really got to do your due diligence and make sure you're putting your effort in the right location. So what's the 1 to 10 rating in terms of, I guess you have to weight the idea, execution, and potential realistic outcome.
So if there was no regulatory bodies involved and this was...
No, that's all part of it. Regulated bodies are part of the business idea.
Oh, if we're talking Canadian business, you want to start this, I can't give it anything more than a 1 because I know it's not possible in Canada. Idea itself, it's a 9.1 because the idea makes too much sense, right? Like we should be able to not blind bid on homes. You should see exactly what the price that someone else wants is. It helps everyone else in the matter to make sure they're getting the best value for their home. And the purchasers, like how many people lose out on a home because of $5,000 when they would have gone up by 15K, but they just don't know. I remember when I bought my most recent home, like we were negotiating with ourselves. It's like, should we go up in price by 5K, 15K, 20K, 25K? What's the amount you're supposed to go up? And luckily we got the home because we went up by a number that I thought made sense, but maybe it was more than we had to. And maybe I could have saved those dollars and bought something else with it. And it's just, the lack of transparency is what makes it a 9, but the market opportunity makes it a 1 right now.
Yeah, Fair enough. Well, it's good to know that my logic isn't completely off, but the execution might be an uphill battle. So a couple ideas out there for people to ponder. And yeah, this is great insight on the industry and world that you live in, which I don't live in, but I think it affects everyone, and everyone should be more aware of it. To your point before about just education and knowledge, like there's a huge opportunity there, and you have to seek it out yourself right now, and you have to educate yourself. There's no really easy way for anyone to do it. So hopefully this gave some good insights into the real estate industry and what's going on. And yeah, good to catch up and be connected. And I'm excited to see where the next evolution of Homewise goes. But I know you guys are crushing it already, so always good to catch up.
Yeah, likewise. Great to chat with. I can't believe it's been over an hour already. So appreciate the conversation, and I'll probably see you this Sunday at our kids' hockey.
Exactly. Sounds good. And if anyone wants to check out Homewise, I'll add the links below. And yeah, feel free to reach out to Jesse directly. I'm sure you'll make sure that everyone's taken care of appropriately.
100%. Thanks so much, Dan.
Hey, buddy. We'll speak soon.
Talk soon.
See ya.